All right, everyone, let's go ahead and get into it. Let's get started. Give me an audio check. Let me know how the audio sounds. We'll start looking at these charts. Hopefully you guys got your coffee or whatever you like. Probably take about an hour today. I know last week I had only a half hour, but I've got a little time this morning, so. And drop me a thumbs up if you haven't done so. I do appreciate that. If you're not able to make the live stream and you're maybe watching this after the fact, it does help the channel. I know there's live streams are supposed to hurt YouTube channels and things like that. I mean, at the end of the day, this channel is going to be what it's going to be. It's never going to be a huge channel. But I like to see it still grow. And then if you guys haven't taken the course, I think you should check that out. I might spend some time updating that course, just adding some additional things. Again, guys, I learn too. Things change. And then obviously methods or, things that I analyze or look at kind of update through time. And maybe I need to look at that course to make sure everything's in there. For the most part, I know it's a pretty solid course, but I could definitely add some stuff just for additional insight. One thing about my strategy, my analysis, I like to keep things relatively simple. Again, I don't trade options. Everything is really go long on stock or sell short. Recently, and really for the last while, I've definitely been more focused on short selling stocks short. But that's, especially since we've been in this bear market. All right, we're in a bear market now. I believe that bear market, we're still in it. We'll only know in hindsight if we're not, but as of right now, I think we're still in it. We continue to make lower highs, all right, and we still have a lower high right there, so I'm looking for that to continue. Let's zoom in on the price action here. Again, if you guys haven't taken the course, though, real quick, usually it's in the link of my videos, all right? You'll find it in the description of my videos. It's just, it's in there. Okay, and then there's the lower highs right there. So on triple Qs, we, you can see really, the price action of last week is just, there it is. It's the chop. The video I put out where it said I think we're at the top of the market was still the 31st right there. That close, really, if you look at it, we closed right there, and that has been the highest close so far. All right, close there. Have not had a higher close. Here, they popped it above there, but wasn't able to hold that price action and closed way down here. So far, that has been the highest close and the top of the market. So we'll see if that continues. No guarantees. Earnings coming out for the FANG stocks starting next week. So lots of potential there for, things to happen. And then let's go down to the hourly chart. And there you go. Just, again, this has been my support level. There was kind of this middle range, so I did mark it out. Because obviously for a good part of the week, they were really holding this kind of middle range here. But, this down here has been really more my support. It's about 313.50-ish. Now, I say ish because it's relatively well defined at this point. We've been in this range for a while, so the algos, the market makers, they're going to drop things below a level and then maybe run it back up, run some stops. So it's 350-ish. And what I mean by that is also I would, in order to consider that level broken, I definitely want to see some impulsive selling, just a break of that level and no recovery. All right, and so let's, and then the top of the level obviously is right in there. They kept popping it. I had it about 318.50, probably because they popped it so much. We probably can just move it up like that. Let me check the daily real quick just to see it, make sure. Yeah, we'll just keep it up there from now. And that puts us at the top of the range at about 319, 30, okay? On the hourly. Yeah. So again, that's the top, that's resistance. Every single time that we hit that, boom, they sold it. And then the dip buyers were tenacious last week, for sure. We all saw it every single time. We'd either gap down, dip buyers just opened up, and they started buying, rallied it up. Every single time it would break down, there's a gap down, rallied up, gap down, rallied up. All right, so last week, towards the end of the week, nice impulsive sell-off, and the dip buyers weren't able to rally it back up. Now, they started to, because obviously you were way down here, and so they started, but not completely able. So let's just see how we open next week. I could easily see us gapping up right here. No technical change in our ranges right now, so definitive breakout from that level, bullish. Definitive breakdown from this 313.50ish, bearish, and that's it. On the daily, big negative divergence remains, so that's telling me likely to break down. But of course, they could do this little stop rate action, then break down. We'll take it day by day. And then the other thing I just want to point out, NASDAQ futures, just a quick look, because it's pretty much the same. And let's go to the hourly. The NASDAQ futures actually right now I feel like are the better thing to look at. The chart's a lot cleaner on the top of the range. Right in here, right about 13,209. All right. And boom, we hit that, rejected. I'm going to get rid of this lower one actually. We'll just call it that top of the range, bottom of the range. All right. That's your hourly chart. So we'll see how things look next week. Kind of closed right in the middle. It's just, we're right in the middle of the range. So that's it. And then look at Apple. Just, this one is obviously the big heavyweight. So here's the daily. There's your bear market starting back in December or January of 22. Resistance. All right. Resistance and closing below resistance right there. Okay, so that's the key level to look at for resistance. And then support is this trend line right here. All right, forming this bearish rising wedge. And you've got support, and right there, pretty much closing just slightly above support, just right there. So technically, no sell signal on that one. It's not broken down. We get a gap down or a big breakdown, and that's going to be kind of probably the nail in the coffin for triple Qs. I think it will happen, and I think it's going to look something like this. Here's Tesla, likely not 10%. A 10% move in Apple is just massive. But and Tesla, you can even say still kind of hasn't broken. There's this little support right here about 164.35. But so far with this gap down, you have trapped a lot of this money right here. This is anybody that went long right in this area has been trapped, and that's almost almost all year's worth of trading has been trapped. If you've bought this thing long in this area. So what I would suspect on Tesla is if you rally, these are sellers. All right, these longs are now underwater a fair amount. They want their money back. So if you rally, many will start to sell as they get close to getting their money back or get their money back. They'll start to exit and create selling, and that's going to continue to put pressure. So that's why I think if you rally, the sellers show up, and then boom, back down you go. All right, that's Tesla. That's the NASDAQ. Let's get into the charts you guys want me to look at. All right, and we'll just go right through it. All right, so we're going to start off with what? BAM? I don't even know what BAM is. Let's take a look. All right, so this is investment managers. Not a lot of history here. You got a bullish trend based on the that. Not enough history really to chart this out. As of right now, it's just the only thing I can really pick out is this trend line. So it's bullish until it breaks. FSLR. I haven't covered that one. I have it. I look at it, but So FSLR. This channel right here is really the pattern I'm looking at. Negative divergence just continues to persist. but you're in this channel. And at this point, I'm not really willing to engage this thing again until I can get a break of this channel. All right, I need to see that break that channel, and that's it. It's bullish until it breaks that channel. We break the channel, there's a huge gap to fill way down here. So I think that, yes, we can start to break down. Also, this blue line here looks like there's some support right there. So what I would think is you break the channel, you're going to work your way down, probably get a bounce down here. There's also some support right in here. Let me kind of zoom in on that. There's some support there. You got a gap to fill. There's several levels to watch. First things first, we need to break the channel. All right, and then we'll likely start to sell off. And it's going to, take months likely to work its way down. Nothing's broken on wheat. It keeps diverging, but it's still built. It's still within this bullish pattern. Probably got in a little early on it, but again, I still like it. And this one, you've got this bullish falling wedge with bullish divergence. None of that's changed. So it's, again, and let me check and see, we just made on Friday another divergent low. Oh, see, I always get rid of my volume. Oh, there it goes. That's fine. We made another divergent low, and the buyer stepped in. See it right there, the little wick? Divergent low, the buyer stepped in. So yeah, I mean, you maybe come down here and hit this, but again, I think the downside's limited, and I've been saying that for a while. Like every time we get down to this level right in here, the buyers step in. So I think it won't be any different. Okay, and we're kind of getting close to this wedge that I think we'll start to break out. The one thing about the wedge that's not my favorite, you can see here's the top of the wedge, and I have only one reaction, so it's a little tough to make that as a wedge. Another way, I was looking at this on Friday, seeing if I can draw it in kind of a tighter wedge, and I think you can probably make something like this, maybe. Put a wedge like that. We're really close, I think, to breaking out of the wedge. Look at ZW, that's the futures. And we continue to diverge as well. Bullish divergence there. We just kind of continue to divergent low and hold support. So we've just gone nowhere since, we're just building a base. So I think we're going to rally soon. All right. Neo. Okay. Been a while since I looked at this one. Clear bear market, obviously. So as of right now, I think we're in a downtrend. And I don't see any indication of a trend reversal happening or going to happen soon. Maybe a possible bullish falling wedge. You do have some divergence, some bullish divergence here. And it's there on the RSI. You do have some bullish divergence here on the daily, and you are in this bullish falling wedge, I think. There is some support. I've had these lines marked out. I'm kind of taking it back. I do see an indication that we might be close to kind of a support area. These were some gaps. I had those marked out a long time ago, and if I roll that out, we're pretty much there now. Yeah. So I think, actually, never mind. I think it's at support. What I'd probably want to wait for is a breakout, some sort of a buy signal. You can buy it, two ways to buy. You can buy it support or buy it on a break of resistance. There's support here. You can break, if you break resistance up here, then that would be a buy signal as well. And yeah, it's okay, actually. All right. Nick Gers. Thanks for the super chat. Appreciate that. Let me look at those. NVIDIA. All right, so I am short this one, obviously. Bullish, or sorry, bearish rising wedge pattern on the daily. Negative divergence on the RSI and the PPO with confirmed crossovers. So those are helping kind of firm up the bear case. Broke trend, and they're just likely waiting for the tech stocks to pick it, you know, kind of the fangs basically in earnings. That's what the market feels like. It's next week, so at this point, maybe they sell it off before earnings, maybe not. I think the way the charts are set up after earnings, and not the day they report earnings, not in the after hours after one of those FANG stocks report earnings, you got to give it a day or two. You got to give it a couple days, but the market will likely start to sell off. That's what the charts tell me. So, yeah. You know, the thing with earnings is that maybe they'll sell it down, and then earnings come out, and they'll pop it in the after hours, and it'll open up in a certain area, and then they'll sell it down. It's hard to say. I don't read too much into the price action right after they report earnings in the after hours. All right, so that's NVIDIA. Still looks good. I think we head right down. There's some support right here. That's there. You know, and you could make, if we go down to the hourly, I don't really like any support right through there. I don't see much support till right about there, and it's not great support, but there is some support, 225-ish. And then that's a move down there of about 17%. Keep in mind, this stock, if they have a bad earnings report, it can gap down 17%. It is a momentum runner, and when momentum runs out, they can, you know, this thing can drop 20% or so. So maybe that happens. That's NVIDIA, and then what was the other one? MCD. McDonald's. Okay. We'll go to the daily chart. That thing's just been on a you know, a tear. Guess we're going to go with that trend line for the longer term. In the short term, I mean, you can see it's just like algos have taken this thing over. There's no volatility. It's just this, you know, this steady move higher. So I would mark out that trend line somewhere right in there and watch that. It is diverging. It's pretty common to see when you have something just grinding higher that you're going to diverge. So you are diverging in the hourly. You don't have a sell signal yet, so maybe just watch this trend line. You break, you're going to likely start to head lower on the hourly chart. Back to the 200-day, you know. There's a trend line of there's some support right through here. You can see there's a gap, support, support, support. So yeah, you break that hourly, maybe you start heading down to there. 260, 50-ish. Still in an uptrend though, and I don't see, yeah, that's it. Okay, that's that one. Back to the top. ABBV, healthcare stocks. I know, like, there was one LLY. We could maybe look at that if anybody wants. So that trend line, this trend line here has kind of been violated a bunch, so it's not as valid anymore. I don't see anything bearish in this chart. The thing is, you can see you've got like momentum. It's kind of dropped. Okay, The only bearish point was right here. See this momentum dropping off? Same with right here. Okay. And then see price, you started to drop, but then they popped it and made a divergent high right there. Okay, that was your moment that you would notice, oh, this is likely going to be, it's a divergent high. It's likely going to fail. And it did. Boom. Okay, so now that you're down here, I see momentum kind of climbing, and I see price climbing equal with momentum. So I don't see anything on the short term on the, oh, this is a daily, so yeah, I don't see anything bearish in this. Not, yeah, that's it. It looks like we're just kind of in an uptrend on that one. Amazon, well, Amazon, I know they hit the 200-day, and let's see where they close. Because remember in my video I said I thought they would close slightly below the 200 simple move average or right at it. And if I zoom in, there it is. See the 200-day on this. Where did my 200-day go? Where's my reader? There it is. All right. Some of, I delete a lot of things as I'm showing you guys stuff. I'm clicking and trying to clean my charts up, and I end up deleting a lot of my stuff. The 200-day on Friday was at 107, and we closed at 106.96. So there you go. I've seen it so many times. It just was like, and that's, you're not going to break out above the 200-day, a week before earnings. And if you do, then it's likely going to be a false breakout. So, and this chart is set up bearish. It's still relatively bearish. I don't know. Actually, this one, the one thing I could see about Amazon, we do have this reversal pattern here. So I'm thinking that holds, but maybe they pop it to this trend line. And if they do that, that's probably going to keep the market up a little bit. I don't know. I'd say the higher probability, you hold right in here at the 200, chop around a little bit more, earnings comes out, it's bad, and down you go. That's the more likely scenario. I just don't have negative divergence on the daily chart here. I just have kind of lower momentum, lower price action. So that's the one caveat on that one. Definitely not one, like if I had to, I'm shorting triple Qs, but if I was going to pick and choose which ones in the triple Qs I was going to short, I wouldn't pick Amazon as the short. It's a little more bullish than some of the others. And then GE, obviously kind of this grind after, it's a back test, guys. To me, that's what this looks like. So it's very similar to SMAR, basically, but I'll show you guys that chart. But you've got this bearish rising wedge, negative divergence, you broke, and then just the algos, they're just back test. All right, so and earnings are coming out, so I think the earnings will be negative or perceived negative, and then we'll start to move lower after earnings. They just ramp it up into earnings. That's what I believe they're doing. And then SMAR, it's very similar. You'll see here, you've got this bearish rising wedge, you break, you back test, all right? You back test it for a little bit, and then they start to sell it, and that's what this one's doing. It's continuing to kind of sell down. So the selling on this, I believe, will intensify as we start to work our way lower. All right, that's GE. Covered Tesla already. URI and Netflix. Okay, let me just look at that. Guys, if you're in here and you haven't been in here for a while, or if you haven't hit that thumbs up button already, please do so. Got about half of the viewers right now who have hit it, so just that helps. All right, United Rentals. I still have support right here. I still think that's a relatively valid trend line, and I believe we're kind of right at it. So till that breaks, I think we're at support. And then and down here this is the daily chart. You did have a little bullish divergence on the RSI. It's a little hard to mark out, but stupid drawing tool keeps getting in the way. Right here, that was a little bullish divergence on the daily, and it's there on the PPO as well. Kind of even. It's flat but lower in price. Divergent low. We're holding support. Yeah, I mean that I wouldn't short this thing. All right, if anything, you could maybe buy it right before earnings though. So I would just stay flat on it personally. Let's let earnings clear out. It's too much risk. With you know, I don't know. That's one thing. You know, if you're not, you know, it's going to be volatile. You know, we're in earnings season, so you're going to have big moves up in after hours. As long as the technicals are good, then I think we're good. And the way that the triple Qs is set up, I actually want to be short into earnings. The reason being, and obviously I could be wrong, but I have a feeling they're going to trap the bulls. And if they trap the bulls, that's going to come with a gap down. I don't want to short something after a gap down. It's a lot higher risk. So I'd rather, you know, I'm going to take the risk, obviously, and go short into the earnings of these FANG stocks and see if I'm right on these gap downs. And if you get the gap down, obviously, I have a really good short position with good, you know, a good entry, and you know, it'll be fine. I mean, triple Qs. I mean, I've been all week. I've been kind of up and a little down, and then up and a little down, and it's just going nowhere. So, because I was adding to the position. All right, so let me move on. Netflix. That one I think gapped down to support. So I've got support here, right in there, and I think we're still above it. So that's it. Support. No divergences, so yeah. Just looks like it's rolling within this uptrend. You break trend, that's a different story, but as of now, still above support. AMD. Yeah, these semis are starting to soften up. They're starting to look soft. Like you can see, I mean, here's AMD. NVIDIA was kind of holding flat, but it's not going up anymore. And AMD is actually starting to, in the short term, kind of trend down. So some support right here. Let me mark it out. Okay, so I think you're still kind of at support, but earnings will dictate this. Trend line support kind of down here. I do believe we are heading down there. One of the reasons we have the negative divergence. So I think we're heading down to this 200-day and, you know, right down in there. Anywhere from, you know, down anywhere from this 76 to this 77.84, I think is where this thing's heading. All right, a drop of another 12% or so. TJ, appreciate it. Thank you. AEHR. Let me look. Okay, so this one, nice. I think this trend line is pretty clean. You got a reaction there. You got one there. You got one there. Close enough. Buyer stepped in a little early. You got another one there. See that? Look, you hit that. Boom. Big green candle. That was at support. Hit support one day. The very next day, the buyer stepped right in. So that's just a reaction, and then we're below it now. So I'd say that's a sell signal. Let me double check. So this was that was about a 5.5% down move. That's good. That looks like a sell signal to me. I don't see like volume quite there, but you don't have to have it. But you obviously like to look for volume spikes, but good enough for a sell signal. And you did have that negative divergence here on the daily. Yeah. Okay. You had this was a divergent high. Again, if I saw this earlier, we'd be up here. I'd say, guys, it's a divergent high. It has a likelihood of failing. I think at a minimum, we're heading down to the trend line down here. This is how would have told you guys because this trend line's well established. And that is what happened. And then once you're at the trend line, I'd say, okay, we're at the trend line. We have negative divergence on the daily. Watch for a sell signal. Maybe we don't get it. Maybe there's another move higher. Maybe we do get it. But if you see the sell signal, that's a short basically. And there's the sell signal right there. Close enough to, I think that is, you could take a position. Any kickbacks to that trend line would be opportunities to sell the rip or short. And I like that as a short. Okay. I'm going to add this one to my list. To my short list. And then we'll look for support on these ones. So you've got kind of a shelf of support. Basically right there. Pretty much where it closed at. That's not a break of that support. I'd say it's at that support. So what they might do is rally it from here. Kind of hold this. At this point, I want to short when we break 27-ish. A nice impulsive breakdown from 27 is the next sell signal. Or if it's going to rally into this trend line, you could maybe start to build a position. Sometimes what they'll do is they'll rally and it'll do this little grindy action where it continues to really just kind of rally below trend. Very similar to that SMAR or that GE. So maybe you can kind of start to, nibble at a short position. And then if it breaks the trend line here, that's obviously like a full short. That's how I'd view it. And then just look for these reaction lows for your levels of support. $23.35, you got the 200, and then $17.62. Those are the levels I'd be looking for. Okay, good one. ASUR. ASUR. Big spike down candle there, but this is kind of a cheaper stock. This thing just rallied. This is like a junk stock that just went on a pump. To me, it looks like it's closed basically at support right there. So no sell signal on that one. It does have negative divergence, and it looks like it's confirming. Let me zoom in on the PPO. See, confirming there. But still close enough. I think you're basically at support. So look for the break of that trend line. Maybe you get another move up and then it breaks. Just because you're at support. They brought it down right to support and closed it at support. So I can see the buyer stepping in. Boom, you pump it. For me, I'm just not interested in this. But if it broke the trend line, that would be an opportunity. And then you got a gap to fill here. So you just target that gap is what I would do. 1140-ish on the gap fill. So if they rally and then break, maybe you're going to break the trend line up here somewhere and you have a potential drop of about 26%. Okay, that's that one. Back to the top of the area where we're at. Let me make sure I'm not skipping anybody. Covered Netflix, covered AMD, DHI. Nah, there's nothing going on there. These home builders they had a relatively strong week, I believe. Yeah, that one. Gapped up. It is a divergent high as of right now. It's not confirmed. Also, like the RSI. Here's the RSI. Made kind of a newer high right there. So that's not divergence. And the PPO is divergent, but the PPO lags a little. So this one is not a stock that I want to short. It is relatively strong. So when I see stuff like this, here's what I'm thinking. I think tech starts to roll over. These maybe grind around for a little while, maybe start to put in actual negative divergence, and then they follow. That's possible. But yeah, nothing I want to short. I don't want to be long. I don't want to buy it after a big move up like that either. I buy it at support. All right, let's see where we're at. How long have I been going? I've been going for about 40 minutes now. Intel. All right, Intel. Looks like it's at support right there. So I have that kind of marked out. It looks at that support. All right, I'd be a buyer here. I don't see any indication that I wouldn't want to be a buyer here. You know, that's a little bit of a cross current from the SOXX and SMH semiconductor ETF analysis, but you can still have a bullish semiconductor within the index. From my, you know, I don't know if I'd want to be a buyer only because this one is diverging. This is your index. Intel maybe goes nowhere, maybe drifts lower. I don't want to go against the current, and the current for the ETF, the index in the semis has negative divergence, and it looks like we're starting to break that trend. I can't really make a trend, you know, I can't make it any other way without it being broken. So at this point, I think we broke the trend and we're just in animated suspension before the earnings come out. So Intel does look bullish. I would personally, I'm going to stand back, not take this only because of the ETF, but you know, it definitely looks bullish. If the ETF looked bullish, this would be a buy for sure. So you do what you want. This could, you know, you got earnings come out pretty soon, so. All right, where are we at? IWM. I'm going to skip the small caps. Sorry, but I covered the broad market, and they're likely going to go where the triple Qs goes. All right. Let's see. JD, Baba. See, you like the Chinese stocks. That's fine. Let's look at, I know Baba's. Let's look at JD. I haven't looked at this one for maybe ever. I don't know. All right. So instantly, it looks like a bullish falling wedge. I can't quite make out the wedge yet. Definitely a divergent low. That's a divergent low. The momentum is still higher. Let me look at the RSI. Yep. So divergent low, not confirmed. So you would want to see some confirmation on that. I don't like this chart. I don't have enough data. Can't make clean trend lines. Like there, I got 1, 2 data points. Can't really make that. Here I got 2. So I don't know. I mean, you're down here at the lows. There's probably some support, but honestly, it's not clean enough. I just move on. Baba. Same kind of thing. I mean, you got some support right in here about 85.47. Yeah, I don't know. They're kind of chopping sideways, but support's right about 85-ish, so I just watch that level. You got earnings coming out. Again, a lot of these things, I think it makes more sense to let earnings clear, but if you want to take the gamble, then that's support. I don't see any indication in the chart that tells me that this thing's going to break down. You know, that's it. I don't see any indication it's going to break down. So if I can't make a case to short it, doesn't always mean it's a long, but maybe it's could go sideways. All right. Covered McDonald's. Roku. Yeah, we can look at that. This is close enough to this like level of support where I can't say it's like broken. I think it's just sideways. Okay. It is diverging. well, not exactly. You had negative divergent. That was a divergent high right here. We could pop up and make another divergent high. That is possible on earnings. That might even happen. I wouldn't. I'm not involved in this, and I'm not going to be. Let's come back to this one after earnings. If they rally this thing, let's say they gap it up on strong earnings or something, then you're probably going to have a divergent high, and it's likely going to be an opportunity maybe to look at a short. But for now, it's sitting on the support shelf. So yeah. Okay, I covered Tesla already. Covered those, Nvidia and McDonald's. XLF financials. Yeah, so I think we're at resistance. You could go a little bit more, a little higher, maybe hit the 200 day, but see this level, I've had it kind of marked out, and they overshot it a little bit. The seller stepped in, and we closed pretty much right on that level. So from here, it could go either way. I think the upside is limited. They could rally it into the 200. I think it fails up there if it does, or it could just, that might have been it right there. The sellers might have stepped in early. To me, it looks like the upside is limited. A move up to the 200 from here would be about 1.5%. So that would kind of be my wiggle room, is, up to that 200, and then maybe just give it a day or two. They might pop it just briefly, but ultimately I think it gets sold into right up in there, and then I do believe we're probably going to head lower. I'd be looking for the next leg lower. This could be a bear flag too. So yeah, that's my analysis on that one. All right, let me see here. SQM. I don't know what kind. This is a news event. I don't know what that is, but so that's a decent level of support. Broke it. That's a big move. 17%. I would say downtrend. I mean, it's definitely broke it. Unless they can snap it right back up and you gap right back up to around 66, maybe they can hold it. But as far as I can tell, downtrending. Okay. This thing is a slow roll, but it looks like it's topped out and started to roll over. Earnings coming out, big move there. I don't know. The earnings must have been leaked or something. So, but it looks to me like this broke. So unless this was just like strong momentum and it's gonna snap right back up to the 66 and kind of hold, then it's broke that support level. So watch that level. It's key. Affirm. What's the symbol? AFM? AFRM? What? You got to put the... There it is. Yeah. Divergent low, I think. I don't see a buy signal here. I mean, here I had this line drawn out right here. I don't know when I drew that line, but that's our resistance, and so far it's holding. So it's about 1202. We're holding that resistance until you see a breakout. I just, again, I'm going to lean on bearish analysis because the broader market is in a bear market. And so until that changes, when that changes, then we'll probably look for more bullish setups. But very likely everyone will be bearish. The market will be, down in the gutter. Everyone will be bearish. That's when I'll mostly be likely, talking bullish setups. All right. I want to buy the stocks that after they've flushed out. All right. I don't want to be buying when everyone's buying and the momentum's strong and everybody's saying the trend is your friend. And that's not when I want to be a buyer. I want to be a lone wolf buyer. I want to be buying after everyone's dumped their hand. So doesn't mean we can't find longs. It's just we're gonna look more for shorts in this bear market. Okay, let me see where we're at, and then we'll go for another 5 minutes or so, and then I'm gonna wrap up. Texas Instruments, TXN. So this is a semiconductor. So you kind of know how I feel about the semis. There's your divergence. I mean, really, this divergence has been building for a long time, and it's just remains. So you've got divergent high, divergent high. Okay, so you have negative divergence. You have a trend line that's pretty clean right there. Still, they stepped in and bought it, and we're at support. Okay, this isn't a breakdown and a back test. I don't think, because I'm looking at a daily chart. You can see they stepped in and it closed right at support, and they did it again. So at support, until that breaks, we don't have a sell signal. We have negative divergence. I think it will break. I don't know if that's going to be on earnings or not. So earnings is coming out on Tuesday. Maybe, I don't know. We just have to wait till that clears. If it's strong earnings, they'll probably rally it up maybe for another divergent high. And then at that point, I would say the probability would be elevated that the next time you come down to the trend line, it does break. So that's one scenario. Okay. The other scenario, since you're at support, you trap the bulls. And I think that's the highest probability, to be honest, but that's just kind of my feeling. So you have, the reason why is you have this uptrend line here, and you have divergence. Bulls have been buying the dip along the way. You're at support. So this is where the bulls should be buying. And the bulls aren't going to exit when you're at support. This is, as a bull, this is where you want to buy. This is not where you want to sell. So they don't exit, and then what happens, potentially, another scenario, earnings come out, and you gap down, maybe below the 200 or somewhere down in here. You gap down, and where it was objective to buy at support, it traps them by gapping down. Okay, and now the bulls can't exit without losses. That's another scenario. I'm leaning towards that, but I'm not going to take it. I've got plenty of semiconductors, so. All right. FSLY, someone says is on the radar. This is one of those momentum stocks, Kathy Wood kind of things, I think. Yeah. So there's a trend. And there's your negative divergence. Look for a sell signal. All right. We don't have one yet. We've got earnings. The market just wanted to rally the year early into earnings, and then I think we're going to turn on earnings. It'll be choppy. Some will gap up on earnings. Some will gap down. But I think as in a general thing, especially a lot of these tech stocks will start to roll over. That's my feeling. I mean, everything's set up bearish. There's a lot of bearish setups in the charts that tell me that we're gonna, start to break down. So we'll add this to our short list. It's decent. Okay. If I didn't get to you, sorry. I'm gonna do just maybe 2 more, and then I'm gonna wrap up. So Let me just kind of scan around and see which ones we want to look at. I got most of them, so. Merc. What's U? Is that uranium? Unity. This is a tech stock. I don't know if they package software. There's a software company. No, I don't see much on that one. MRK. Kind of interesting. So this one, you made, you rallied up, made another divergent high. We traded this. It was profitable. I think we caught it several times. I definitely caught this move. Then it rallied up. I think I reshorted and caught some of it, but I let it go. And then, and then I just haven't been back into it. Making a new divergent high right now. So this thing you got to look for a few things. One, you want to see a bearish PPO crossover to help confirm this divergence. Once you get that, we'll establish some sort of a trend, which I think it's right there. Let me go to the hourly, right in there. All right. And so then once you have the bearish PPO crossover, then, or this could come first, but either way, look for a break of this trend line here on the hourly. You get that bearish PPO crossover, and then it should be another leg lower, okay? Meaning, just another leg lower. I think you probably come down to the 200-day. Maybe even take it out. But minimum down here, probably 103 again. That's really good support for right now. Okay, so that's a decent setup. It's not, a few things need to happen, but it's a good setup to short. And then I'll do one more, and then I'm going to wrap up. HYMC. What is that one? Well, this is a penny. I'm not going to do this one. We'll move on. Sorry, these penny stocks are, there's just, look, it's a downtrend. All right, that's it. Just a downtrend. No indication that it's going to uptrend. Let me cover a different one. BPT. Kind of another junk stock. Well, it's in a downtrend, obvious, starting to maybe show signs of life with a little divergence. Divergence doesn't give me a reason completely to just take a position, but it does. It's a condition, basically. I can't quite make a super clean trend line going all the way back there. So you maybe have to kind of tighten it up and roll it into here. That's better. Can't really make a trend there. So you could watch that trend line right there. Until that breaks, I wouldn't have a buy signal. And then if it breaks, you probably run up to the 200-day. So that would be that one. Okay, that's all I got. I'm going to go ahead and wrap it up. You guys hopefully have a good weekend. I got to get going, and I will catch you on the next one. All right, take care. Bye.